Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring, and today is Saturday, October 1st, 2022, and welcome to my weekend review edition of my podcast where we talk about the trades that I took this week, when I took them, why I took them, and how I am going to manage them going forward. Well, first of all, what a week we have had. My goodness. The move down in this market has really been incredible. You know, I've been trading for 28 years and I've seen a handful of these, but they're surprising every single time. And the move down we have had, like I said, it was just incredible. So we'll talk about that today. I hope you are doing okay out there. I hope you're staying safe. I hope you are following your plan, position sizing correctly, doing the things that you need to do to withstand this kind of price action in this market. So here's the plan for today. First of all, we are going to run the U.S. legal disclaimer. Secondly, we're going to come back. We're going to take a look at my current positions, talk about when I bought them, why I bought them, how I managed the trade since entry. And I have some closed out positions. I have some open positions. And so we'll go through all of those. After that, we are going to talk a little bit about trader psychology. Most important skill in trading really is the ability to create a plan, follow the plan without it amplifying your emotions and getting you off track. So we will do a little segment on that. Hopefully, it's always helpful for me to talk about it, and I hope it's helpful for you as well. After that, we are going to do a trading poem from my good friend Frank, the trading poet. Always writes something great, pertinent to what's going on in the market. And then after that, I have gone down through my entire watch list. I have identified some potential symbols and potential trade setups for next week that I will be interested in potentially taking. Usually when I take a trade, it either has to move to the upside to show some upward momentum or downside, reject some downside levels as well for me to get interested in a trade. But I do have a handful. We'll go over those. I'll tell you what I'm interested in, what I'm looking for some possible entries next week. All right, so first of all, have to run the U.S. legal disclaimer. I'm going to take about 40 seconds, so hang tight for about 40 seconds and I'll be right back. Thank you. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. Okay, thanks for sticking through that with me. I appreciate it. All right, let's start with the current open positions that I have. Here we go. Here is Amazon. I bought Amazon on September 26th. Nice setup here. We had a close under the 30 RSI, close back over the 30 RSI. That's why I did buy this here. I bought this at 114.97. Of course, whenever I enter a new position, I have two stop losses. I have an emergency stop loss, which is 2 ATRs below my entry. I take whatever my maximum allowed loss on the trade is. A good rule of thumb is 1% of total capital. So for example, you have $100,000, 1% of that is $1,000. I divide that, whatever the maximum loss is, by the value of the 2 ATR. And you can see up here on my screen, it's $8.96. I always position size based upon that 2 ATR. So if it does get to my emergency loss, I know exactly how much I'm going to lose. And how much would that be? Well, 1% of my total capital. Now, I also have another stop loss called my end of day stop loss. So 95% of the time, my end of day stop loss is going to come into effect when I get out of a trade. Only about 5% of the time am I going to hit an emergency stop. But you have to have that emergency stop there so that you know in the worst case scenario what's going to happen. So, people ask me, oh, so you're going to lose $1,000 on every trade. I'm like, no, that's just the worst case scenario. Most of the time, I'm going to lose much less than that. So anyway, entered here with a close under 30, back over 30. That was one entry signal. A supporting entry signal, which we had to close below the negative third ATR channel, close back above the negative third ATR channel. 92% of prices bounce or at least go sideways when they get to the third ATR channel. And you can see this is the case here. It's still now above the third ATR channel. But with the under 30, over 30, my end of day stop is going to be a close back under the 30 because that's the reason I took the trade in the first place. So emergency stop, 2 ATRs below my entry. End of day stop, a close below the 30 RSI. Of course, I have this orange line up here. This is my 1.5 ATR trailing stop level. If and when the price ever moves to that level, then I go into trailing stop mode. Has not got there. And then lastly, of course, whenever I get a move in any particular day, that's the value of 0.45 ATRs from the previous day's close, I take 10% of the position off. So I bought here on the 26th. Next day we gapped up and I did take 10% of my position off. The next day we had another nice move up here. Also took me out of another 10% of my position. So at this point, I'm out of 20% of my position at profitable levels. So now it's back down under my entry. So now it's a losing trade, but taking off the profits while it was profitable helps mitigate. So right now, the RSI level is 34.51. It is still holding the 30 RSI. So if it does close this coming week below 30 RSI, going to go ahead, take my end of day stop. If it gets to my emergency stop, I will just go ahead and hit the sell button immediately. Most of the time I wait till the end of the day for my RSI readings, because at the end of the day, the large financial institutions come in at the end of the day. I consider them to be the smartest money on the street. So the closing price is the most important part for me, but the emergency stop down here doesn't matter if it's 1 minute after the market closes or 1 minute before, 1 minute after the market opens or 1 minute after the market closes. If it ever gets down there, I don't wait around for the end of the day. I go, okay, it hit my emergency stop. That's all I can take. And so this particular trade, Amazon down here, not including the parts where I took off at profitable levels, this particular trade down 1.72% currently. Twitter. Well, Twitter is an anomaly, especially in this market, and I'm not complaining because it's been a little bit since, of course, with this market, it's been a little bit since any swing trade has worked. But Twitter, really like this trade on Twitter here. We ran liquidity down here. We broke market structure to the upside. This is ICT mentoring. Look him up on YouTube. That was one part of the equation. The other part of the equation was that we came back into this fair value gap here, but we also came back and I felt confident that we were going to bounce at the 200-day moving average. So this is kind of an interesting trade for me because I did not wait till the end of the day to buy this. I bought this intraday, bought this at $40.62. Now, same as the Amazon trade, that was my entry, is that it bounced off the 200. If it had closed below the 200, that would have been my end of day stop. Of course, the red line down here, what's that? That's my emergency stop. So if it had gone straight back down there, how much would I have lost? I'd have lost 1% of my capital using the 2 ATR position sizing and maximum allowed loss that I talked about earlier. And by the way, in this podcast, I do my best to go over what I'm doing and what I'm thinking and how I'm doing this. The intention of this podcast is not to teach you step by step how I trade. I do offer that, however. I do teach private one-on-one lessons in the evening time via Skype. I love to teach. I've had so many great students around the world. I teach you all 5 of the different trading approaches that I use step by step. And I'll talk about that later in the podcast in case you're interested in that. But, I don't want to just feel like I'm glancing over all these nuanced situations that are going here, but just because of time constraints, I do what I can do, but I don't have the time here to go over every little single nuance. But anyway, we fell back into a fair value gap here after changing market structure to the upside. Bought this here at $40.62. Closed below the 200-day is my end of day stop. Of course, my maximum allowed stop down here. You can see the trailing stop level, the orange line. Remember, if we get to the orange line, then it becomes a trailing stop methodology. Well, you can see it got close, never got there, never got there. 1, 2, 3, 4, 5 days ago, it did get to my trailing stop level. So what that means now is that if I get because it's reached the trailing stop level, if I get a close below a previous day's low after reaching the trailing stop level, I'm going to get out and take half my position. Now, I'm already taking stuff off, right? I'm already taking portions of my entry off because of the profit targets that I talked about earlier. Big profit target here. I remember I hit 3 profit targets on this particular day, hit some more profit targets here. Friday, unbelievably, Twitter was up 2.76%, and I hit another 2 profit targets here. So I like to play offense and defense with my trading. Defense would be emergency stops, end of day stops, trailing stops, but the offensive part is selling into strength. And important level here, we got to a 65.24 RSI. That's important for me because once we get to a 65 RSI level, now if I get a close below the 5 EMA, that's this little thin blue line here, I would get out of all of the position. So, I spent a lot of time with how to manage trades, phasing out stop losses, selling into strength, what I just mentioned here about getting to the 65 RSI and then closing below the 5 EMA. That's an important maneuver for me, because if you're well above the 5 EMA, that means your trade is most likely working. So we are to 65 RSI level. So going forward next week, if I get a close below any previous bar's low, I'll get out of half the position. If I get a close below the 5 EMA, I will get out of the entire position. But thankfully, this particular trade is really bucking the trend. And this particular trade is up 7.47%, which seems incredible in this market. Twitter is very, very, very strong. So I'm very grateful for that, up 7.47%. So those are the 2 open positions. Let's go back to the positions that I took earlier in the week that I got stopped out of. And here we go. I did enter Google on the 23rd of September when we went under 30, back over 30 intraday, rejected the -2 ATR channel. So what was the main reason I took this trade? Intraday rejection of the 30 RSI. Therefore, if it closes below the 30, I'm going to get out. Of course, you can see the emergency stop down here. You can see my trailing stop level here. So I entered here at 98.71 with an intraday rejection of the 30 RSI and the -30 ATR channel. Next day, boom, went right back down, got me out of the trade with a close underneath the 30 RSI. Not a big loss, 0.55%. Which is fine. Then the next day it went up and I was like, oh, dang it. And then it closed lower and I was like, okay, it was good to get out. Then of course we had the big day on Wednesday, I believe. And I was like, oh shoot, but I took another entry. But then of course, Thursday and Friday were horrible, down and down. So the point is, with the close under the 30 RSI, I got out with a loss of 0.55%. And of course it is good that I did take that loss because it's much, much lower now. And that's the key. You never know if you're going to be right on a trade, but the key is if you're right, have the courage to stay with it, have a process in place so that you can have a big trade. If you're wrong, like I was on here, keep the loss small like it was here with a 0.55% loss. And then lastly, LMT. I really like this trade. Didn't work out, but I did really like this trade here. Took this back here on the 28th of September. We had an intraday rejection of the 250-day moving average. We had an intraday rejection of the 30 RSI, and we also had a V1 trigger. Here's bar 1, bar 2. Bar 2 went below bar 1 by a quarter ATR and then closed back above the close. So, if I don't take this trade, I don't know what trade I'm going to take. It's important to take trades that have confluence, combination of indicators lining up together, and this was it. Rejection of the 250, under over 30, and a V1. If I'm not going to take that trade, oh, I'm not going to take any trade, but it doesn't mean it's going to work. So entered here at 399.30. Of course, my end of day stop on this one was a close below the 250-day moving average. Have my emergency stop down here as I do on all trades. Very next day, collapsed, closed underneath the 250-day moving average, and I got out at 389.50 for a loss of 2.65%. You can see it got down to my emergency loss, but I was already out of it the previous day. So yeah, loss of $2.65. And that is it for current positions. All right, here we go. Let's talk a little bit about trader psychology, shall we? This is from Trading Composure. What a great channel. Please follow them at Trading Composure over on Twitter. One of my favorite channels. Haven't seen them post for a while, but I've seen it more recently, and this really made sense to me. The gap between where you are and where you want in trading to be is called discipline, focus, and consistency. It's a short sentence, but there is a lot to this. If you're not where you want to be in trading, most likely it has something to do with your discipline, your focus, and your consistency. And trust me, I've been trading for almost 28 years. The best way to trade, everyone, is to be disciplined, focused, and consistent. Have your approach. Whatever's going to happen is going to happen. But if you have the trade set up correctly, you will have a good asymmetrical risk, a good risk to reward, that if you're wrong, you can be wrong small, or even in the case of an emergency stop, you only lose 1% of your account. And if you're right, you could make 2, 3, 4, 5, 10, 15%. And that is the mathematical formula for profitable trading. But you have to be consistent. Whenever I get an idea in my head about where the market's going, whenever I get an idea or a bias in my head, it never works out well. I'm just being honest with you. And I do it. I do it. I mean, you know, I have to be honest. But when I trade correctly with the discipline, the focus, and the consistency of what my trading plan is, it doesn't always work, but the results are always better. So take it from me, take it from experience, that if the gap between where you are and where you want is to be is called discipline, focus, and consistency, it's true. If you've had a bad run lately, start fresh, review your trading process, review your positioning size, review what you're doing, and stick to it. I promise you, over the long run, you are going to do better. So thank you very much, Trading Composure. You can follow Trading Composure on Twitter at Trading Composure over on Twitter. All right, let's do a little poem from Frank. This is my good friend Frank, great poet, great trader, great musician, great journalist, and he writes these trading poems about trading, and they're always spot on and pertinent. So please follow him at FrancoD over on Twitter. Today's market poem: what is finance if not sense and reason? A challenging market isn't meant to be pleasing. A farmer deals with weather amidst the growing season. If your trades can't be leading, there's nothing wrong with breaking even. And, you know, I have people tell me, you know, I'm just trading, I'm breaking even. I'm like, hey, if you're breaking even, you are doing pretty dang well, especially in this market. Nothing wrong with break even. It takes a while to learn how to trade, get the nuances of it, go through the different markets. So if you're a break even trader now, you're doing better than 90% of the people. So what is finance if not sense and reason? A challenging market isn't meant to be pleasing. A farmer deals with weather amidst the growing season. If your trades can't be leading, there's nothing wrong with breaking even, and there is nothing wrong with the break even trade. Frank, thank you so much. Appreciate that. All right, let's get over to the potentials for next week for me. Apple has had a very, very challenging week. It had some downgrades. My gosh, has it really got hurt here. Let's take a look at the weekly right now. Weekly, you know, I like to look at multiple time frames. This weekly is not so great. There is an order block down here that it is holding. That's a good sign. I like to look at the weeklies to trade on the dailies. It did lose support of the -1 ATR channel here. Doesn't mean it can't go back up, but I like that we are getting very, very close to this order block right here, the top of this bar. That should give it some support. Maybe. Not for sure, but maybe. But this is a place where it certainly could bounce. So I like the level on the weekly because it's close to the top of the order block. If we look at the daily, it transposed this line over here. So it's very, very close to that. Right now, the RSI is at 28.54. It's below the -3rd ATR channel. So on Apple, if we were to close back above the 30 RSI, we would also close most likely above the -3rd ATR channel. And then based upon where it is on the weekly with the top of that order block there, that's why I'm interested in Apple if it closes above the 30 RSI next week. It's 28.54 right now. So that's what I'm looking for on Apple, is a close back over the 30 RSI. Silver. Silver is interesting. You know, we have not talked about crossovers lately because everything has been going down, but this is AGQ, double leverage silver. You can see the 5 EMA here is under the 20 EMA. This is a good back-tested, quantified approach to buying AGQ if you get a 5 EMA crossing over the 20 EMA. It's not there yet. You don't want to front run it. You want to wait. But if we do get a 5 EMA that closes that goes above and closes over the 20 EMA on a closing basis, that is a good back-tested approach. And I will be going long silver next week if the 5 closes above the 20, unless it's above the 2nd ATR channel. If it's up here, I'm not going to buy because 88% of prices fail here at the 2nd ATR channel. So it's ideally what I really like to see AGQ do is go sideways for a couple days. I like sideways motion before the crossovers happen. But you know, if we have a huge spike up in silver on AGQ on Monday and it's up here, the 5 will cross the 20, but doesn't mean I'm going to buy this high up. I don't buy crossovers when they're above here because a lot of the theoretical move is already there because we're getting close to the 3rd ATR channel. 92% of prices fail there. You can see right here, we got right to there and that was it, right? So anyway, AGQ next week when the 5 crosses back over the 20 EMA, if it does, and it's not above the 2nd ATR channel when it happens, I will buy AGQ. All right, let's look at the Dow Jones Industrial, the Dow 30. Well, let's look at the weekly first. Did not hold the 200-week moving average, but you can see the 250-day moving average is down here. So I may take this as a weekly trade next week on Friday. If it rejects the 250 and holds, I would get long there. From a daily standpoint, however, look, we're at a 27.28. Now, under 30, over 30 on individual stock, yes, that's completely legitimate. But on index, I think it's even stronger. And I mean, boy, are we low right now, 27.28. You don't get a lot of 27.28 readings on the Dow Jones Industrial. So if we can close back above the 30 RSI this coming week, I will get long DIA. Even if we don't get above the 30 RSI, if I get an intra-week rejection and it rejects the 250 on the week, then I would get long for a weekly trade on the Dow Jones on Friday. Walt Disney, well, very similar. Let's look at the weekly. Weekly is coming down. We have a fair value gap from here to here. Again, this is ICT mentoring stuff. You can find that on YouTube. We change structure here. We have this gap here. We're right in the middle of the gap, which by itself is a buy signal. And so that's why I like this. Not necessarily for a weekly trade, but I like the weekly level right here because it's in this value gap. And then here on the daily, we're at a 29.34. If Walt Disney closes above 30 RSI next week, keeping in mind it is in the fair value gap here on the weekly, I would buy Disney with a close over the 30 RSI. Goldman Sachs, you know, it's gone down, but it's been stronger than the market here. I mean, it's definitely gone down, but it has been holding a little bit better. Let's take a look at the weekly. Weekly is in a fair value gap between here and here. So it's in that fair value gap, which I like on the weekly. And then to execute the trade on the daily, it's 3104. It is above the 30 RSI. That's what I was saying. It's holding a little bit stronger than the rest of the market because it's holding above the negative 30 ATR channel and it is holding above the 30 RSI. So this is already a legitimate long trade here as it is. I'm not in it. So next week, if we get another intraday rejection of the 30 RSI or a close under the 30 and back over based upon the weekly being in this fair value gap, I would get long Goldman Sachs. Now, if we have a big day up, Apple, Disney, Goldman Sachs, Microsoft, they're probably all going to trigger at the same time. I'm not going to take all the trades. I mean, I like to limit myself to one trade per day. Over the 28 years that I've traded, I've found it's best for me emotionally, psychologically, but just wanted to point that out. If we have a big up day, I'm not going to get into 6 positions in one day. I limit it to 1, and I'll just have to take a look and see what the best one is. But for Goldman Sachs, another under 30, over 30, or a close under 30, back over 30, I would get long Goldman Sachs. Microsoft, let's take a look at the weekly. Weekly, well, we're getting close to the -2 ATR channel. It's not quite there. I'd like it better if it was there. 88% of prices tend to bounce when you get to the -2 ATR channel on the weekly. But let's get to the daily and see. Well, we're to 2934. Microsoft, one of the biggest and best companies in the world here. We did break down from these pivots. I'd love to see a close back over the 30 RSI on Microsoft. And if it does, how am I going to set up the trade? Well, I'm going to take my maximum allowed loss. I'm going to divide it by the value of the 2 ATR. That's going to tell me how many shares to buy, right? It's also going to show me where my maximum allowed loss is. But as far as the daily entry, why am I getting in? Well, it's 29.34. If it closes over the 30 RSI, it's going to show me that it rejected the levels underneath the 30 RSI. Close back above, I would buy Microsoft with a close back above the 30 RSI. Qs. All right. Let's look at the weekly. Wow, we lost the 200 week moving average, which was a shame. The week before, it looked like that was going to hold, but no, did not hold whatsoever. But again, we're at 28.94 RSI. If we close back above the 30 RSI on the Qs, I will definitely get long. We did go under 30, over 30 during the week, but then it failed, right? Like the Amazon trade that I had and so forth, still in that trade. But if the Qs get above the 30 RSI, they'll also get above the -3 ATR channel, and that would be my entry there. S&P is going to look very, very similar. A little stronger on the S&P on SPY than Qs because Qs lost the 200 week moving average, and on the weekly, the SPYs are still above the 200 and the -2 ATR channel. So it looks like it's respecting that level so far. So next week, if we get a close over the 30 RSI on the daily, that would be my entry on the SPY. Would also most likely close above the -30 ATR channel as well. If that does not happen, then I won't take a daily trade, but I will look on Friday to see if we have some kind of rejection of this 200 week moving average. As you know, I day trade. I trade stocks on the daily time frame, the weekly time frame, the monthly time frame, and I'm seeing a lot of good potential weekly trades, very deep dip buys on the weekly trades, but we'll have to wait till Friday. So again, on the daily, if it closes back above the 30, yes, I will get long on a daily trade. If it does not and keeps going down, then I will turn my eyes to the weekly to see if we get some kind of intra-week, either a close under, close back over, or some kind of intra-week close below the 200 and reverse back up, showing that investors are not willing to sell below the 200-day moving average. So that's the plan on SPY. Let's look at UNG. Again, let's look at the weekly first. Well, the weekly is holding support here of the green line here. This is the -1 ATR channel. I like that. That is a level of support. We are also in a fair value gap back in the past. So I'm just looking in the weekly as the big picture on the larger time frame, is there some support? Yes, it's holding the -1 ATR channel. It's in the fair value gap. That's all good. On the daily, where I want to execute this, because I like the weekly, well, look, we are very close to the 200-day moving average. So if we come down, have an intraday rejection of the 200-day moving average, or a close under, close back over the 200, I will get long back UNG, which is natural gas. XLE, let's look at the weekly. Well, I do like the weekly here. We made a higher low close back above the -1 ATR channel, back above the 50-week moving average. We also had a V1. This is a legitimate entry on the week right here. I could have taken this trade on Friday with the legitimate close under over the 50, the -1 ATR channel and the V1, but I'm looking at this as a daily trade, but I want to look big picture at the weekly first. On the daily, well, we're kind of stuck in purgatory here between the 200-day moving average and above the 250-day moving average. The close under, close back over the 250, you'd still be slightly down on the trade. But for next week, what I'm looking for on XLE, again, based upon the weekly, and I like the support on the weekly, would be a retest of the 250-day moving average. I'd actually prefer this. We could also go with I could also go with the close above the 200-day moving average using the 200 as my stop. But really, ideally, one, because it's lower, and two, it has more support levels here with the -3rd ATR channel and the 250-day moving average. So ideally, an intraday rejection of the 250-day moving average or a close under, close over would get me long XLE. Second option, if we move up and get a close back above the 200-day moving average, then that would also be an entry for me as well. XLF, which is the financial ETF, you can see on the weekly, we did lose the 200-day moving average. It would be better if we were above that. We also have a double bottom and a bullish divergence here. Here's the low with the deep red MACD bars. We rallied into green. Here we're just as low, but the MACD is less. This is from Dr. Alexander Elder. I did study with Dr. Alexander Elder personally. This is his favorite technical setup. These double bottoms, bullish divergences, or double top with bearish divergences. But I like the divergence nonetheless here, the bullish divergence here. So on the daily, we're at 30.45. So we're still holding the 30 RSI. We're still holding the -3rd ATR channel. What would get me long? What would get me long would be another test under 30 and close back over 30 RSI, or a close under, close back over. That would definitely be interesting to me. On the weekly, could be a possible weekly trade. If we close back above on Friday, if we close back above the 200-day moving average, I could get long there. Or if it goes down and rejects the 250-day moving average, could get long there on the weekly as well. So XLF has potentials on the weekly and then also on the daily. And then last but not least, XLRE, which is the real estate sector ETF. Boy, has this come down. My goodness. But look, on the weekly, look what happened. We rejected the -3rd ATR channel. We rejected the 300-week moving average. That's a good sign. That's a legitimate entry just there as is. But I like the weeklies here because of what this has done. Let's look at the daily and go, okay, what's going to get me long XLRE? Well, it's 26 RSI. If it closes back above the 30 RSI, that would be an entry point. You can see here's the 5-day moving average. Boy, it is just closed below this 5-day the entire time. Anytime you can close above a moving average that you've been below for a long time, it could indicate that there's a change in what's going on in that particular market. If we're 26.17 right now, if we were to close back above the 30, most likely we would also get a close above the 5 EMA, and that would get me long on XLRE. So again, I mentioned at the beginning of the podcast there that in this podcast, I try to teach you what I'm doing. Of course, it's just probably enough to get in trouble sometimes, right? But if you really want to learn how I trade specifically, if you would like me to teach you exactly how I trade, all 5 of the different trading approaches that I use in a one-on-one setting, I do teach private one-on-one lessons in the evening time via Skype. I love to teach. I've had really good success with my students. I think I teach a great course. It does cost $1,750, but it is worth every penny, I promise you. So if you are interested, My email address is in this YouTube video down below in the description. Feel free to send me an email. Say, Greg, I'm potentially interested in taking your course. I will reply and say, hey, that's great. Fantastic. Thanks for saying hello. Let's set up a Skype call. The Skype call is not a sales call. I promise you, I'm not going to try to sell you on anything. One of the reasons I started this channel is I wanted to help people learn how to trade better. And so that's what I want to do. So in the Skype call, it is not a sales call. It's just you and I talking about your trading goals, what you want to do in trading, what your challenges are. And it's a good time for you to ask me specific questions about my course. I have people that write me and ask, I'm like, can we just talk about this? Like, I'm better in talking than typing. But yeah, it's a good time for you to ask me any specific questions. And then when we're done with the call, I will not contact you. You think it over, sleep on it as long as you want. But one day if you wake up and you say, hey, today's the day I really do want to learn how to trade, then just write me back and say, Greg, we're ready to take the course. And I'll say, great. And we'll set a time and a date and away we will go. And I'm sure you're going to be glad that you did. Secondly, if you like online courses, I have a great online course available at udemy.com. The link's in the description of this video. In that online course, I teach you the deep dip buy stock trading strategy, which is completely pertinent to what's going on right now, because we are certainly in deep dip buy mode. I mean, you can see other than the AGQ trade, everything was a deep dip buy strategy. And I teach you step by step in that course on Udemy how to trade the deep dip buy strategy. And it's very affordable. It's between $12 and $15. So it's definitely affordable, but there's so much content there. There's 9.5 hours of video. There's 26 videos, there's 15 study guides. So do yourself a favor. If you have some time this week, just click on the link, grab the course, and watch it. I know you're going to be happy. And then 2 more things. If you like today's podcast, I would appreciate it if you could hit the thumbs up button. It really helps to build the channel, keep the channel around, let YouTube know there's some valuable content here. If you could hit the like button, I would appreciate it. If you could share it on social media, anything like that, I would also appreciate that. And then lastly, and most importantly, listen, life can be tough out there for humans and animals. Try to go out and do something nice for another human being today. Try to go out and do something nice for an animal today. Both the animal and the human will appreciate it. I promise you they will. It would make the world a better place if we could all do that. And I try to do that every day. I try to just purposely go out and try to do at least one nice thing for a human, at least one nice thing for an animal. And I just think it's a good policy. So it's been a rough market. It's been scary. I'm not going to sugarcoat it. It's been tough to make money on anything to the long side. But I do believe in my 28 years of experience, we will get some kind of rebound eventually. I just don't know when. Let's stick to our trading plan. Let's stick to our process. Let's stick to our signals and try not to call a bottom, right? So please be careful out there. Stick with your plan. And we'll reconvene next week, and hopefully we have a little bounce here. So thanks again, everyone. Really appreciate you spending your time here. And I will see you next weekend, and good luck this week. Be good, be safe, and all that stuff. And I will talk to you soon. And on the way out here, I have to run the U.S. legal disclaimer. So thanks again, everyone. Take care. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.